Good afternoon, everyone. I hope you're all very welcome to the Thursday market US session open. So, of course, we're looking at the price action this morning and, of course, gearing towards the US session open now in the next 10 or 15 minutes. So I suppose first things first is all about looking at the dynamic in the markets. And, of course, if we look at the dollar, I suppose the big talking point today is the movement in the dollar. So we are starting to see that little bit more exuberance in the dollar. That massive trend we've talked about over the last week in terms of bearishness, in terms of sell-offs, that rampage to the upside in the indices and the stock markets is starting to become a little bit more diluted and becoming under pressure. Now, we talked about it yesterday, the dynamic, the higher time frame viewpoint, reconciling that with the shorter term movements in price action as well. And it's important to be able to reconcile the dynamic between both elements of consideration. So, of course, with the structural increase in the dollar from this 106 level on the index, we, of course, have seen the indices come under a little bit of pressure, particularly this morning, off the back of some of the shorter term fundamentals. So, of course, in the back end, we're seeing the S&Ps sell off from this corrective area, and I'm just going to move some of the tools away for a moment. You can see that very, very clear sell-off. So Tuesday's high off the back of the PPI has proven to be the weekly high so far of the week. As we've seen the markets dilute consistently, we've broken through that 39.50 level we talked about yesterday, and the markets has continued to sell off this morning. So we're at 40 to 45 points below that range we talked about in yesterday's open in our community group. And of course, that's not just exclusive to the S&Ps. We're seeing the NASDAQ drift lower. It's trading under the 11,700 level. And of course, the Dow Jones off that daily level at 33,800, and the rejections this week at 34,000 has seen it come lower as well. And of course, yesterday we talked about this region of interest, this kind of 500 point range for the week between 32,500 and 34,000. It has now broken. And of course, when we look at the price action this morning, that sentiment is really hammering the price action lower against what's been a very, very consolidated week of price action. Very up and down, very choppy in both directions over the last, let's say, 4 or 5 days since last Thursday, off the back of the CPI into the weekly close on Friday. And of course, the first 2 or 3 days this week, Monday, Tuesday, and Wednesday, has been very up and down. It's been very back and forth. And you only have to look at the price action on the indices to kind of reflect that back into reality. The FTSE as well is continuing to fall. So this is obviously something I've been watching myself, personally speaking. It's been in somewhat of a range of consolidation, but is now trying to grind lower as well. So 7,300 was a level of worth keeping an eye on this week. We talked about it on Tuesday. We've talked about it yesterday as well. So we're watching this level very, very closely to see if there's any sort of reaction, to see if there's any sort of catapult down to this level. Because when you look at the broader perspective, there is a fairly decent pullback to the potential to the downside if we start to see these indices start to give way from these ranges, and we see that selling bias coming through. You only have to look at the S&Ps on the higher time frames to see how far it's come in recent weeks and how far it could potentially come in the next week or so. So the next 7 to 10 days is really going to be crucial to see whether this so-called Christmas Day rally in the stock markets is more temporary and short-lived for another wave lower, or whether it's just a corrective flash in the pan. And that's something that we're obviously keeping an eye out on across the board, not just in the S&Ps, not just in the US session, but also back home here in Europe as well. And of course, when you look at the broader perspective, we're seeing that similar narrative in the DAX in Europe, very, very strong rally over the last month. It's only natural now that we're starting to see a little bit of profit taking. And initial signs is we're starting to see some of that playing out very, very nicely in both the DAX and, of course, on the Euro stocks as well, which has also drifted lower this morning since pretty much the 8 a.m. bell, right? So since the London Open this morning, and of course, with the comments coming out of the UK, we're starting to see that negativity floating back in. And it's just a simple battle between buyers and sellers in the markets to determine sentiment. And of course, when you look at the Euro stocks, when you look at the DAX, when you look at the FTSE over the last, let's say, 3-4 weeks from a realized percentage perspective, a lot of those indices were up anywhere from kind of 18 to 22, 23% off the lows in the last month. So it's only natural that we're starting to get some corrections. It's only natural that we're starting to get profit taking on those longs, and we're starting to see that unwind coming through. Now, of course, we are seeing short-term selling today, but we need to see if that becomes reinforced into the weekly close. And of course, that really sets out a tone next week where really the sellers look to be more in control than that of the buyers. But of course, we will cross that bridge when it comes to it. So that gives us kind of the broader viewpoint. And of course, if we go back to the pound today, pound has come under a bit of pressure. Euro dollar has come under a bit of pressure. And of course, gold has also come under quite a bit of pressure. So of course we're seeing gold here, that unwind from this region up here. And let me just tidy up this chart a little bit. You can see how gold prices has come back into this 1750, 1760 level from highs just underneath this daily level here at 1790. So very, very choppy here in gold as well. But that's atypical of the symmetry. When things are going well, we see the dollar weaken, we see the treasury yields weaken, we see all of these other assets doing well. So the stock market's doing well, the euro doing well, cable doing well, gold doing well. But when we start to see that reversion, we start to see that dollar picking up strength in the rotation, then obviously it's a case of selling or undoing a lot of that bullish momentum we've seen in these asset classes and kind of migrating to the downside. And of course, if you look at the treasuries, in line with what we're seeing in a stronger dollar, we're also seeing the treasuries pick up as well. So the treasuries has picked up off of this 3.7% level. Now, yesterday we did talk about the opportunity of it maybe coming lower, 3.65, but we're seeing that short-term bottom coming in at 3.7 and decent rally off of that level. So it really just becomes a case of what is the barometer of gauge today, and that really becomes the dollar, right? The dollar should be probably front and center today, because if that risk aversion continues to play into the market, we should be still looking for dollar strength in the rotation. We should still be looking at indice weakness and knowing the sentiment, knowing the correlation in the markets and how they're obviously reacting as well. All right, that should be front and center. So at this point in time, we're obviously seeing the dollar at short-term highs here around about 107.20. So from a supply and demand price action perspective, will we get that push through? Will we get that elevation of risk safety out of the fundamentally bullish stock markets over the last couple of weeks and those other risk assets and see that rotation back in? Now, initially, so far, we're kind of halting at the highs, which does give a little bit of a positivity for a pullback. But of course, we have to reconcile that with the price action. And as we look at the S&Ps today and stock markets, broadly speaking, NASDAQ, Dow Jones, as we talked about, all have ground lower. So if you're not selling or you haven't been in sales already, you're really now prepared to sit and wait to see if there's any sort of correction, see if there's any sort of pullback in these indices for the next wave lower. So if you're kind of looking at this now, you can kind of see that structural areas have been broken on the Dow Jones. Structural areas have been broken on the NASDAQ. On the S&Ps, they've also been broken. So rather than selling at the lows, wait to see if there's a correction or look at your volume profiles to ascertain where your key areas of interest are and then be able to execute based on that as well. So depending obviously whether you're trading volume or price. So that's obviously the two distinguishing elements that you need to take into consideration from today into the US session open, which is going to be starting now in a few minutes. And then, of course, into the afternoon and into tomorrow's weekly close. So that's really kind of the fundamental objective that traders should be looking at for the rest of the week. Now, of course, when we go back into the market profiles, we're obviously bringing the market profiles in from a market perspective. Let me just update this as well. Into the open, we can see obviously the clear sell-offs naturally enough. So the sell-off alluded yesterday on the 4,000. That's obviously continued today all the way back from 39.50, 39.60, which was that talking point yesterday and of course Tuesday, and back to this 3,900 level. Now, of course, if you're looking at S&Ps now, structurally speaking, we are keeping our head above water at this 3,900, 39.08 level. So that's really going to be the key today to see, is there any sort of retracement against that initial movement to see how does the markets develop today at obviously 2:30 into 3 p.m. and through the course of the afternoon. Now, structurally as well, we do have POCs at 39.65. So it would be absolutely ideal if we see a short-term movement lower in the dollar off this 107.20 back into some of these regions, and then maybe try and break up early next week or maybe tomorrow. So that would obviously allow for a little bit of an S&P retrace. Now, whether that happens or not is obviously yet to be confirmed, but obviously that would tie back into this idea of coming back up here, testing these levels, these value low POC levels here between 39.39 and 39.65, seeing if there's any sort of material reaction, and then allowing for that price action. So when you're looking at that broadly, can the price action get back into the 65 level? And that is roughly where we're seeing here. So 65 is pretty much our liquidity movement here. So if you're looking at order blocks and liquidity, you're seeing it from this threshold area. So that would be worth watching to see if there's any sort of retracement. Myself personally, that's what I'm waiting for. And of course, then obviously looking to jump in on that as well, if that was to play out. But broadly speaking, that's, I suppose, the primary aspect that traders probably should be looking at today. Now, if we look at the NASDAQ, very, very similar movement, break through that 6,700 area that we talked about yesterday and Tuesday, and the markets has continued to propel lower. So we're now back trading at 11.5s. Now, whether it's going to extend all the way back up to the POCs is a very questionable ask, considering how aggressive the selling today has been in the Nasdaq. And we know when the markets turn south, Nasdaq tends to outperform on the upside, but it also tends to outperform on the downside. So when you start to see that shift in sentiment in the markets in terms of that risk orientation, that flight to safety idea, the Nasdaq is always the one that gets hit the hardest because it's the one that's more volatile because of the association with tech stocks. So you just need to be wary of that as well. But we're starting to see a little bit of coming through here on the open. So the Nasdaq bottom is starting to play out. Now, whether that will sustain into 3 p.m. is really the number one question, because I think if we're breaking through 500s, you're probably going to see that sell-off continue. Okay. Similarly with the S&Ps, if we're breaking through 900s, you're probably looking at that sell-off to continue. And similarly again here with the Dow Jones, if we're breaking through that 200 level, that 33,200 level, I think you're going to see that price action obviously dilute. Now, so far so good for the markets in the first minute or two. Now we're seeing that liquidity move this morning. We're seeing the price action be driven lower. Can we get that one last kind of pullback into these areas and then see if the price action can unwind from there and melt off from there? That is really going to be the main focal point for traders this afternoon. So that's where we are on the markets in terms of market profiles. I'm just going to finish off by looking at the USA Dow Jones 30. I'm really kind of watching the price action into today's open, and of course, very, very similarly, 33,600 is the point of control, or the approximate region, and we've broken all the way back down to 33.2. So that would lead to a 400-point rally, which really puts the price action back into this range here. This kind of area of interest here at 550, but you also have the liquidity area here, the order block level at 17. So that 17s is kind of what I'm paying out. But that, again, you can see how the liquidity is tying very, very nicely back in with the market profiles and the volume. So keep an eye on that 600 level for potential selling opportunities today. So far, we're seeing that little bit of a retrace, fairly hefty retrace in the open. Dow Jones, first minute or two in the markets, very, very swift buying coming in there. So we're starting to see a bit of an unwind against this heavy selling this morning. So wouldn't be surprising to see the markets continue in the first 30 minutes to the upside, giving a little bit of a relief rally against this sell-off. But of course, that can very, very quickly change, and you do need to be nimble, particularly with assets as volatile as the Dow Jones as well. All right. So I hope this trading session has been helpful. For those of you who are not in the community, feel free to obviously get onto us. You can join. You can obviously see what we're talking about on a daily basis. So there's a continuous, constant flow of information for those of you who are obviously quite new as well. And of course, if you have any questions, feel free to reach out to us also. All right. Have a great afternoon, everyone. Trade safe, and let's see how these markets develop in the first 30 minutes of the trading session.